RSI momentum is my favorite topic because trading is all about momentum. If you all know that I keep repeating this word momentum in every discussion of mine, we can make money in any stock provided it moves. There is momentum in it. If there is no momentum, you can continue holding a stock forever and it will deliver no gains. So whether you're a trader or you're an investor, ultimately momentum is what you trade. Now, how do you look for momentum and the strength of momentum is what everyone's question is, right? So you may be in a stock but lacks momentum, or you may be in a stock which is trending and you do not know where the momentum is going to end. So there are multiple queries as traders regarding this particular subject. So we use indicators to understand momentum. Now, RSI is nothing but a relative strength index. It's an indicator of momentum, which is developed by J. Wells Wilder. It is a momentum oscillator that measures the speed and change of price movements. Now, RSI is a band. Okay, so it is like 0 to 100, let's say, and it moves in this band. So whenever the stock price moves along with the, over days, the RSI also moves along with that based on certain calculations. There's a formula for it. RSI is also calculated on the closing basis. Now, RSI moves in a band, it moves in a particular range. So traditionally, when you say or read anything about RSI, they say that when the RSI is below 30, it is oversold. So one should buy. When it is above 70, it is overbought and you should book profit because it can fall from there and you can watch out for re-entry levels. Now, theoretically, this was developed on this logic of overbought and oversold. But when you observe RSI over years, you'll realize that RSI actually below 40 or below 30 or above 70 doesn't mean you start buying or you start selling it. It only shows the strength of the momentum when it is above 60 or below 40. So we broke the range of RSI in three slabs, in three ranges, that is 0 to 40, 40 to 60, and 60 and above. So when the RSI is below 40, we consider that to be bearish, or we say it has a weak momentum. When it is between 40 and 60, the RSI is sideways. You'll see a lot of whipsaws in between, and there'll be not a very concrete, strong momentum which will continue. But when the RSI is above 60, it is bullish and the trend can continue. As long as RSI is above 60, the trend can keep continuing. You may see some drawdowns in between, like the way we saw right now in the market this week. But overall, the trend continues to be bullish overall. Now, RSI is also seen on multiple time frames. Now, how do I break up RSI? Something is very simple. I break it up and I usually relate RSI to the gears of our vehicle. We have about 4 to 5 gears typically in our vehicle. So when we start the car from our house or office, wherever we are, and until we reach the main road, we are in the colony roads, we are at much lower speeds and our gears are typically in the first, second gear, right? So that is where we are the RSI of below 40 or maybe between 40 and 60 in some cases, which only means that you cannot increase your speed, you cannot go into higher gears. There will be the narrow roads, you will have to stop eventually, slow down. So there'll be too many hurdles on your way. When you come onto the main road of your city is when your speeds are higher than your colony roads. So as you increase your speed, you go into higher gears. Maybe you get an opportunity to drive even in the fourth gear of your car on a city road. But how long can you continue? There will be traffic, there will be signals, there will be too many, bottlenecks on the way. So your speed will not be continuous when you are on the city road. Even if you are at higher speeds, there will be just spikes of those speeds, but eventually it'll come down. So your RSI between 40 and 60 or very briefly above 60 can be like your city roads. Now imagine if you're driving the same car on the highway. There the speed restrictions are much higher. You can drive up to 120 or maybe higher. You are in a top gear of your car and there are not going to be any hurdles going forward. Even if they are, you'll probably just slow down a little bit because there's a vehicle in front of you which is probably going slower. or maybe there's a village that has come across, so you need to slow down a little as per traffic regulations or whatever. But you're not going to slow down completely, nor are you going to stop without a reason. And your journey is long ahead, so you're going to pick up pace once again once you either overtake that vehicle or you cross the village. So you will continue to be in the top gear of your vehicle until you reach your destination. So when you are trading, you ideally want to be on that highway, where the momentum is gradual and consistent rather than your city and your colony roads, right? Now, when you look at RSI and a chart from multiple time frames, that's when you get to understand whether your stock is on the highway or no. To know that, what we do is we break up the chart into daily, weekly, and monthly. Your monthly is like your highway. So when the monthly RSI is above 60, it only means it is going gradually fast and the pace is going to maintain. Your weekly is like your colony road, your city roads, where it is a big road, but again, it's not like your highway, so there are hurdles in between. Your daily road chart is like your colony roads, where there are too many hurdles. As long as your stock in monthly is above 60, the trend is going to continue and it's going to be bullish. Your weekly above 60 is an added bonus because your momentum on both the time frame continues to be strong. And your daily will have ups and downs, your retracements will keep happening. I'll give you a couple of examples to explain this better. Sorry. Now this is daily charts. I'm just showing you the momentum on daily. Here, RSI of Nifty on a daily is above 60 all through for this entire span of about 2 months. Now, in this 2 months, the price of Nifty has gone from 15,000 all the way to 18,000. That is 3,000 points. Going by the traditional, the rule of RSI, if RSI was above 70, we should have booked profit. So somewhere over here itself, when RSI was crossing 70, we should have booked profit. If we had done that, we would have missed this entire rally. So the best part of your momentum is what you miss. So what we say is when the stock is above 60, it is in momentum. You need to continue holding on to your stocks or your index positions without worrying about the drawdowns or the shakeups in between, because they will be there for a couple of days. But eventually, when the stock is trending, it will continue to move. Now, even over here, when you see the RSI coming and testing, this shows kind of a some weakness. People would say, okay, chalo, it was overbought, so correction had to. The price did not fall. Even if it fell, it did not go below your entry levels. So you still are in substantial profit. One would exit only if RSI goes below 60 on a daily. And that too, if your longer term time frames are not very strong, right? So as long as RSI is above 60, your stock is going to trend. This is the best way of identifying momentum and riding the momentum of a particular stock. Look at it over here as well. This is another 1 month. RSI was above 60. How gradually, quickly the stock moved up. So this is example of how RSI above 60 is the best time for you to be in a particular stock or the index. What happens when RSI is below 40, which is called the oversold? We call it the weakest zone. When it is below 40, you see very gradual falls or consolidation, usually falls. Here, it was below 40 for 2 months, Feb, March, April, 1.5 months. But see how the fall was. This is the pandemic fall. But going below 40 was a clear sign that, okay, it is going to get weak. We did not anticipate this fall, but we knew it is going to get weak. But below 40 is a clear indication that, okay, things are not very good with it. It doesn't mean that you start buying. Please remember that. It doesn't mean that you start buying just because it is oversold. It only means the momentum is weak. And when momentum is weak, it doesn't mean you start buying. You wait for reversals and then you buy. So when you read anything about RSI and you read that it is below 40 or below 30 is oversold, it does not mean you start building up your position. You need to watch out because it is weak. Now your RSI between 40 and 60, which is typically your sideways movement. Now here RSI was sideways for another 2 months. In this 2 months, look at the whipsaws. It was consolidating in this range. And this is a very tough time for anyone to trade. This is a time where your stop losses keep getting triggered and you have no clear direction, nor do you know when the market is going to move up or down. Most of your negative news also come at this time. Your global, economic, all news. So there is a lot of worry and tension in this range. And that is clearly seen on your momentum charts of RSI between 40 and 60. Now, RSI on different time frames, as I said, RSI above 60 on longer time frames shows you strength of the momentum. Lower time frames retrace and move up, giving multiple entry opportunities, which only means when your monthly, weekly charts, the RSI is above 60, your daily chart will keep moving up. In between, it'll keep retracing to the means, to the averages, giving you re-entries if you have not taken positions in that, or if you're a trader and you've booked your profit, it is a level at which you can re-enter that particular stock or the index again. So your daily will continue to give you those multiple opportunities. Current Indian market, according to me, is in that scenario where it is giving you multiple entry opportunities. Stronger on a long term helps stock move up faster even if the market consolidates or when it reverses. Sorry. Right now, the stocks that we hold or the market index itself, which is stronger on the longer term time frames, when the market has to move from here upside, the stocks with a stronger momentum on higher time frames are going to move up faster and they'll hold on to the momentum versus the stocks which have no long-term strength in momentum. If the longer term time frames do not have momentum in that, those stocks from here may move up a couple of percentage points, but not, go beyond that. So you have to be very careful. You can just do a swing in that. Yeah. Now, this is Nifty. This is the monthly chart of Nifty. Now, between October 2020 till May 2022, Nifty monthly RSI was above 60. Monthly RSI of Nifty was above 60. You can see this continuous trend. There were probably a 1 or 2 months of, flat or consolidation in between, but overall trend was very strong. Then between 22 May to April 23, Nifty had a lot of, even on monthly, had a lot of whipsaws where it was going below 60 and coming back up, but overall it was sideways. There was no strength because at this time, even your weekly and daily charts were not very strong. That is when it was primarily sideways. Now, since April this year, it has again gone above 60 and it continues to be above 60. Let's see when Nifty was above 60 on a monthly, how Nifty on other time frames has behaved. Now, when monthly was above 60, you see the trend on the weekly. There were a couple of painful weeks in between, but overall the chart was strong. There was this brief period where it went below 60. That was the time it was consolidating and then it moved back up, giving the strength again. But overall strength was very strong. The time when monthly Nifty also was not very strong, weekly was hovering between 40 and 60 upside, even 70 sometimes. Just see the whole sideways movement. This is a time where you can start accumulating, but trading becomes very difficult. Your profit margins are very small. There's a lot of sector rotations. Your stop losses get triggered too often. Now, when the market broke out in April, May this year, when monthly is above 60, even weekly is above 60, there has been a constant gradual upside. There is no weakness in the market. There would have been 1 or 2 weeks of weakness in between that we had seen, but overall, there has been no major corrections or, retracements in between until this week that we have seen. Now, let's see how the daily charts have behaved. You look at the way RSI has behaved on the daily in the same time where monthly was above 60 and the weekly was above 60. Now, every time it goes above 70, if you were to sell or exit and book your profit, you would have missed this entire rally. Would you want to exit over here, waiting for a big dip to come to re-enter and miss this entire rally? no one would want to do that because you want to be part of the bigger picture. And the bigger picture, by just seeing the daily chart, you cannot figure out the trend of the Nifty alone. Because here it shows overbought, it'll retrace, it'll come to 40. Now, this fall would have worried everyone, but it was not really a concern because your longer term strong time frame momentum was very strong. So when Nifty tested 40, when longer term time frames, the RSI is above 60 and the daily RSI is between 40 and 50, is the best time for you to build up your position in that particular stock or index, because it is a very clear sign that everything is good in that stock. It has just booked some profit, it has retraced, and it is going to reverse from there and go back up, and you can be part of the next leg of the rally. Now over here, when it tested 40 and reversed, anyone would have bought after this particular candle would have continued to rally this. Now there was a little bit of sideways momentum. There was some whipsaws, but after that the rally continued. Now here, at no point in time it has gone below 40. It has not gone into the bearish mode at all. It was sideways. After sideways, it broke out, and when the RSI on daily went above 60, you can see the rally. Every time it goes above 60, there's a very quick rally that you see. Again, there is some consolidation. But at no point in time, whenever Nifty has gone into the sideways zone, if you had accumulated or built your positions here, the price would have come back to those levels. So if you are in a particular stock or index, I repeat, which is strong in upside momentum, your daily charts may show weakness on and off in between, but you will never have any, a point to worry about your positions if you are not leveraged and you are in your comfort zone. You can ride the entire rally upside. Now here also, when after May, when the monthly and weekly RSI went above 60, Nifty has consistently been going up. We saw this rally. Even right now, if you see, it has gone below 50, almost tested 40. Nifty daily and weekly are above 60, and this has come between 40 and 50, is a sign that market is going to bottom out. It may consolidate, it may test these levels for a couple of days and then move up. We have to look for reversal points at this juncture to build up our positions rather than fearing at such times. This last 3 days of fall was no reason for us to worry because the momentum was strong overall. There is no weakness in the longer time frames yet. So dips are to be used for buying. And this is exactly what we have been saying for the last 3 days. Just imagine this thing to be over here, somewhere over here, how it has retraced and pulled back up. This is what we are going to seek for a couple of days going forward, and then we are going to see the rally. So let's just gear up for this from here. And this is what clearly the RSI is pointing out to right now. Sorry. Bank Nifty. Now this is just beautifully placed. Your monthly is about 60, daily is just tested 60 and back. And your, weekly and daily is reversing for 40. This is an ideal case scenario, which I also explained in the market review today. You have seen whenever a stock meets criteria like this, how it bottoms out, and for you gives you an opportunity for you to buy and move back up. Okay, I'll give you a couple of stock examples. Now, this is Infosys. This was not recent. This was Infosys the best rally that we saw post-pandemic. The monthly RSI was above 60 all through. Weekly was above 60, barring some point in between. The daily saw its own ups and downs, but look at the whole rally in the stock. This rally, if you only go by the daily charts, you would have missed this entire rally. You will miss just every shake-up in the market will make you exit or not allow you to re-enter. It was very clear that this two were very strong in momentum. So your dailies, you could trade. You could hold on part of your quantity, trade with the rest of it, or every time book profit and wait for it to retrace to re-enter. Isn't it very clearly how a combination of these multiple charts with higher time frames with the RSI shows you the strength of a particular momentum? Same Infosys right now. has gone below 60 on the monthly. It is between 60 and 40. Weekly is between 60 and 40. All you see is a fall in the stock price. Any reversal is to sell. There is no absolute strength in the stock. Why? Because the longer term itself is not strong. Your vehicle is not on the city road. Your vehicle is not on the highway. Your vehicle is in the colony road. So every opportunity you go to race a little, you're going to see a bottleneck and you have to slow down or stop. As simple as that. What I keep saying is company may not be bad, but it is not a perfect time for you to trade in it. These are the times where you can only accumulate these stocks when they build up momentum for the longer time. That can happen over a period of next few months. Same goes with Wipro. When Wipro was good, RSIs, look at the rally. Now, same thing happened over here, the whole rally. Right now, Wipro, when it was consolidating between 60 and 40 on monthly, it went below 40, which is bearish on weekly. See the fall. However good a stock is, if you do not know how to read the fundamentals or whatever may be the global scenario affecting it, by just looking at the RSIs, you will know exactly where the stock is placed. You may just utilize this space for sell on rise and make money on the downside. But this is not an indication anywhere for you to go long. Value buyers can start accumulating in equity gradually at their own pace, but so I'm giving you a couple of more examples for your understanding. And this is Siemens. Now, Siemens, right from 21 onwards, the monthly RSI is about 60. Just see how strong the rally in Siemens has been. While this rally continues, it gives you multiple opportunities to enter. Look at every time the daily has come to 40 or around 50, it gives you an opportunity to buy. Every time you buy, you can be a part of the next leg of its rally. Even recently, when this fall had happened, it tested RSI of 40, it reversed from there. And it's rallying. This rally continues. Now, this is an amazing chart that I want to show. ITC cross 60 at this point. On weekly, it continues to be above 60. You saw the whole rally. While monthly remained above 60, the weekly went below 60 for just about a couple of weeks in between over here. And that's when the daily also started showing its weakness and sideways movement. There was nothing wrong with the overall trend. It was just consolidating. But this is time where all the fear starts coming in that, okay, ITC is become weak again. It is time to book your profits and exit. The whole story is over. The story was not over. It was just building steam again. And it was very clearly seen because your longer term momentum was still holding on. Now, whenever you get opportunities in stocks like Siemens and all, when you see RSIs coming down on daily basis towards the lower levels of 40 and 50, you need to watch out for a reversal candle. You enter your positions on reversal candles. You don't buy the entire quantity at this juncture. You need to start pyramiding. As I always say, buy as the price moves up. You buy as the price moves up. You don't have to hurry up building it right at the reversal point itself. Your initial level, what you have purchased would be, the stop loss would be below the low of this candle. Sorry, below. Just see your risk reward. Everything else is very well placed. You start accumulating here. You keep your stop loss here. Your stop loss is maybe of 100 points in Siemens. Your upside is quite high. Your upside is 400-500 points. But you need to do pyramiding. You need to keep adding on rises, and as you add on rises, you keep trailing your stop loss higher. At a point, even if this rally doesn't continue and it falls back, your trailing stop loss will get triggered somewhere here. So you are not going to incur loss at any given time. So pyramiding along with a right reversal point is very important. PFC. Now PFC, we have been a part of this rally since the time of the breakout itself. Now, why haven't we completely exited this? We have on and off bought this and traded with PFC and REC. PFC and REC, momentum continues to be strong. The stock continues, rally continues to be strong. There have been a lot of profit bookings in between, but the profit bookings every time has given an opportunity to enter again. Every time we have entered, we have booked some profit. We have waited for a retracement, re-entered on reversals, and we have ridden the rally upside. Now, since I think almost May onwards, PFC, we have been consistently trading every rally of it. Apollo Tyres. Just look at the RSIs. Look at how beautifully they're placed on the higher time frames. The daily RSIs has retraced, a couple of times, but look at the overall strength. There has not been a major correction. There have only been consolidations. And these are the stocks where even if you see 1 or 2 or even 10 days of sideways movement or some small profit booking, you need not worry, because eventually it is going to reverse and you'll see a rally again in them, because the momentum is strong on the higher time frames. This is REC which I was talking about. Likewise, higher momentums, stock continues to rally. You see your profit bookings, consolidations and corrections in between, but there is nothing to worry absolutely. Same goes with Cummins. Cummins, we had entered here, it covered the gap, we had to trigger a stop loss, but a reversal. Look at once it got back above 60, above 40, if one had entered here, how the rally took place. Now, yesterday, again, it has come back to 40 levels. Your RSIs are at 60 and 60 above 60. Here it is taking support at 40. Cummins, you need to watch out for a reversal sign from here to enter again. Your longer term momentum, it will consolidate, but overall is intact. It is not showing weakness for now. Whatever weakness is there is only in the short term. On the weekly also, it has tested the AMAs, averages. So here is a time where it will consolidate and should move back. Your risk reward is so apt that let's say that you buy on reversals from here. The low of yesterday is your stop loss. If it goes below this, we are not going to buy it. We'll have to wait. We'll have to wait for it to give further support levels and signals to re-enter. Now this is Aurobindo. Right now it is playing well, but at a time when RSI was monthly was below 60, it only showed extreme weakness. Till now, I have showed you charts where RSI was above 60 on all time on the monthly. Now it is below 40 on monthly, which shows extreme bearishness. Look at even weekly. Weekly was extremely choppy. How the stock kept falling. Every rise to 60 or to 50 was an opportunity to sell rather than buy. When I say monthly, weekly are strong, your daily gives you an opportunity to buy every time it comes to 40 or 50. Every time the RSI on a weekly and monthly is below 40, it is a sell on rise on daily. Every time the RSI comes to 50 or 60 on a daily, it is an opportunity for you to sell and make money on the short side. Now, this pullback would also be a sell on rise until you see weekly and monthly getting stronger. Once weekly, monthly got stronger at these levels, you would have not entered here assuming this momentum to be strong. But by the time weekly, monthly got strong, it would have been somewhere here. From there, you can start being a part of the upside rally of a particular stock, like in case of Aurobindo. The bearishness is over, now it is bullish. And it is now stronger momentum. The entire pharma sector itself is moving out what we discussed last week. And this is clearly being seen even in stocks which are beaten down extremely, like Aurobindo, which are turning around and now turning bullish. Lupin. Now, these examples are of the past, not current. When Lupin was below 60, below 40, your weekly also was below 40, it was a drastic fall. Every rally upside was to sell. Every time it would come to 60, it was to sell. Every time it even tried to cross above 60, it was a time to sell. Until it crosses weekly, monthly, crosses 60, starts getting into a sideways zone and then starts moving up. Now this is Coal India. Coal India, we tried to trade in that, but our trailing stop loss got triggered. Now this was a very short span where the monthly chart was strong, even weekly was strong. But even in that small time span, look at the rally that we saw in Coal India. After that, it fell. Now all time frames are sideways. Now, when all times are sideways, a rally of this 6-7% also does not hold beyond a point. If anyone who had thought this was a turnaround time and one should go long for a longer duration here, should have understood that it lacked momentum and this was 1 or 2 day story. After that, it was going to fall. Clearly, it has fallen. When your longer terms are not strong, your rally on the daily charts are going to be very short-lived. You are on your colony roads. Colony roads, you cannot consistently drive fast. You have to stop after some point. And this is exactly what Coal India is pointing out to. If this was strong on these two charts also on recently, this rally would have continued. So do's and don'ts, check for monthly and weekly RSI to be above 60 and daily between 40 and 50. It'll give you the right entry levels to play for the next swing. And those stocks are the ones with a stronger momentum. So daily RSI, check for entry exit based on that. Please do not buy at a time where you see the signal that it is taking support at 40 or it is also taking support at averages along with that. Wait for a confirmation, that is a reversal candle to be formed. After reversal candle is formed and it gives you confirmation, that's when you start buying. After that, you do pyramiding. As I explained, you have to start buying as it price moves up. Please accumulate as price moves up and then trail your stop loss. By doing that, you will negate the downside in case it fails or it falls again for whatever reasons. Your stop losses will get triggered in profit or marginal loss rather than incurring a deep big loss by doing a pyramiding and trailing stop loss. Please do not ignore that. We give you rating for the same reason, 3 and 5, 4 and 5 and 5 and 5, because as the price moves up, it starts building strength on this. So any questions